Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. I have a special guest today, Rich Annunziata. He's the co-head trainer in the T3 Live Active Trader Mentoring Room alongside Evan Lazarus. Rich, welcome to the show. Why don't you tell the T3 Live community a little bit more about yourself, as they might not be as familiar with you as some of the other personalities.
Well, John, first I want to thank you for finally having me up here on the big stage. It's great to finally be here.
Great to have you.
You know, people know me in the Active Trader Room. If you don't know me from the main room, I studied right next to Laz for about 3 years, and I went through the program just like anyone else would. You know, the book, the videos, the whole 9 yards. I read it probably more times than I would like to admit. You know, it takes a while for it to sink in, and then finally I reached a level where, if you want to call it a master type level, where I started to help and train different people, and that in fact helped enforce the rules and the strategies even better for me as well. So it's still a give and take with me in the room. You know, I get a lot out of it, and I think the room gets a lot out of it. Been having some great feedback lately from it, and all's well.
It's something that we talk a lot about, is that when you get to a point with material that you learn how to teach people, it helps you learn more. And a lot of times, Scott talks about this, that being a teacher actually helps improve your learning process and holds you more accountable.
Yeah, I mean, I definitely read it probably like 15 times, but then every day we're teaching it, and over and over again, it just helps to reinforce the good habits, cancel out the bad habits, and I feel like I owe it to the students in the room to be on top of my game and execute the right way, not, you know, fall off the wagon. So,
yep.
You know, it definitely keeps me on the straight and narrow as well, and hopefully makes them better too. So,
before we get into the charts today, I know you guys are having a webinar next Thursday. Mm-hmm. Tell us a little bit about that. It's going to be you and Laz, right?
Yes, me and Laz. You know, we're going to give a little bit more of some backdrop on how the room reached its current state now and where it's going forward. And just we're going to give everyone a sample of what a day is like in the Active Trader Room. You know, we don't really like to necessarily just give people something to trade and tell them what to trade. We like people to think different. You learn why we're trading something. You learn your probabilities. You put yourself in a position where the odds will be more in your favor. And over time, it's more of a numbers game. If every time you're risking A to make B, the more trades you take, the more you could be profitable. So it's just about doing the right thing day in and day out, and we want to share that with the rest of the group. Anyone that needs help or could fine-tune it, I think it's the right room to be in, and I think you become more of a thinking trader rather than just an impulsive trader that just chases highs or just chases something that someone calls out. So I think it's definitely could help a wide range of traders.
Yeah, it's, you know, you could be successful for a week, for a month, for a year even, but in terms of having long-term success, something that I know is in the Active Trader course is that you have to have a process. You have to think of trading as a probabilities game and as a numbers game. So that should be a great webinar next Thursday. We'll go ahead and take a look at the charts now and get some of Rich's takes. You can get a little bit more of his perspective based on that active trading course methodology. We can go ahead and take a look at the chart of the spiders here today. The market's not yet closed, but as you can see, we're trading in a range once again, as we have been for the last several weeks. You know, the market, we've talked about the potential for the action to dry up heading into late August, which is typically a very quiet time in the market. Rich, from an active trading perspective, is there something that you're watching on the S&P right now that's important for everyone to take note of?
Well, now I would say if you go and you look at the chart, the 8 EMA was very, very important for quite a while. The whole month of July, we never really broke below it. Now into August, most of the earnings are out of the way, and we're just starting to flatten out a little bit. So I think the importance of the 8 EMA is probably put on the back burner. Now we have the 21 that's in play, you know, around 168.5. Below there, you know, there's levels of support, 167 to 167.5, but I wouldn't be surprised if maybe until September, we may just go somewhat range bound until, you know, some news or just some volume comes back into the market after the summer vacation is over for the big guys.
So you talked about the idea of the slope and pace of the EMAs, and then you mentioned volume. How much do you factor in volume in your trading decisions? Does it affect your size? Does it affect your trading decisions in general?
I would say that volume is probably more of a secondary factor. It's something that I look at. More for like a breakout, or if I'm trying to judge a pullback, you always want to see volume maybe come in a little bit on the pullback if you're looking to buy something. So it's more of a secondary factor. I would say that price action leads all. Mm-hmm. But volume is something that I will look at just to see, especially for like a breakout day, or if I'm buying into a moving average, you want to see volume begin to slow down if you're buying into weakness.
Something that we've been discussing, moving on to more stock-specific commentary, is sort of a changing of the guard that we've seen in tech this earnings season. Every earnings season is sort of a chance for stocks to reset, for new leadership to emerge, and we've really seen that in tech. That's not to say that some of the old guard, we're talking about Google, Netflix, Amazon's, those had decent reports. They're holding up relatively well, but when you're talking about active trading and a go-to list of stocks that you want to be looking to for 1 to 3 day trade, which is the bread and butter of the active trader room, there's been a little bit of a changing of the guard. Maybe go into a couple of those that you think are really going to be on your radar in the room over the next few weeks.
Okay, yeah, so definitely, I like to look for the names that are already set in motion. Rather than try to predict what's going to be in favor, I like to go to the names that have the slope. So once I identify that, I look to buy some short-term weakness, whether it's a 30-minute, 60-minute, or daily pullback for a swing, or a 3 or 5 minute setup. So Facebook is one that...
Take a look at the chart of Facebook.
So Facebook is one that, I probably wouldn't have bought this before the earnings beat with your money. Now, definitely...
Touched it with a 10-foot pole.
Yeah, maybe 20 foot. Now, something changed here. If you look at a monthly, we took out, a lot of price action, a lot of congestion, a lot of range-bound action. Now, if you look at the daily, we're just riding above the 8 EMA. So this tells me your time frames are lined up, the stock's in motion, it's more likely to stay in motion just so long as it stays above that 8 EMA.
I think Newton was a trader. That was one of his laws.
That was it. Exactly. See? I'm a man of science as well. Another one is LinkedIn. Pretty similar setup. This one maybe a day or two away. Normally moving averages are used to gauge a trend, but they also can be a tool to gauge whether something's overbought or oversold. You don't want to see too much space in between the price action and the 8 EMA. So it's getting to a point where maybe next Monday, Tuesday, if it just can hang up there for a few more days and do nothing or slightly pull back, the closer it gets to the 8 EMA, that's going to be a tool to time in on something like a LinkedIn. Another one that I'm currently in is Baidu. Came into the 8 EMA, roughly 132. It did catch an upgrade today, which I did sell a little bit into it. My first target was 140, the recent high, but I'm still holding it. But that's a pretty good example of something changed. It beat earnings, it held up, and then once it got within striking distance of the 8 EMA, buyers stepped up, and it's still in motion.
Yes, that important thing is some people ask us, how do you know when something's overbought or oversold? There's different ways to do it. There's oscillators, there's stochastics, there's all different technical indicators, but the EMAs and the 8 EMA specifically is a good way to gauge short-term oversold or overbought conditions based on how far the current price is away from the EMA. So a good example of that with Baidu. And it seems like I'm noticing a theme with the stocks that we're talking about right now in terms of the concept of sector sympathy, is that we notice a lot of stocks in the social media, the new media, the recent IPO type stocks outperforming some of the more old guard in tech. There are some exceptions, but there's a couple other names that you mentioned to me that we wanted to talk about in this recap. A stock like Yelp, for example, that social media, not exactly, it's not like LinkedIn and Facebook, but it's part of that general sphere of stocks, and really great action from Yelp if we take a look at that chart.
Yeah, Yelp is a stock that, really proved itself. It had a good number. Now it had a nice gap up. It's been defending the gap, holding the gap. And so long as it's above the 8 EMA, it's something that I would be interested in buying, because that slope makes any type of follow-through, whether it's a swing trade or even a trade off a 5 minute, you have a bigger likelihood of follow-through if your time frame's aligned. So if the daily and the 5 minute are both telling the same story, that's just more tailwinds for your trade to go up in your favor. The other one was Zillow, right? Yeah. Zillow, same story. This one's actually maybe gone already. It's a brief pullback. But most times when you have a stock that's riding on the 8 EMA, it doesn't really end. It doesn't really peter out and just end. Most times you can get that explosive push to where you want to sell in to that and book your trade. And if the 8 EMA breaks, it breaks and you exit quickly. But the risk to reward, you can catch a big winner in these names that are already set in motion if you buy them in the right spot.
Just taking a look at the monthly chart, just to give you some perspective on where Zillow came from. Huge move, obviously. And then another one you mentioned to me that you are long, I think now, is Workday. One a little bit more off the radar. W-Day is the symbol.
Workday. A little trading floor joke there. Sorry, I couldn't resist. Yeah, so this one, it's a little bit thin, but you can see it's that same theme. Above the 8 EMA. It's working out rather nicely. I probably got involved with it before the break of 70. So now I'm holding a feeler position on still, and I will continue to do so just so long as that 8 EMA holds up.
Then you look at chart patterns. It looks like it has a nice bull flag here as it held most of this igniting bar.
And that's what you want to see up there. It really wasn't fresh selling. It was merely just profit taking, meaning the bulls probably still have control of this one. So you want to try to stick with it. And when there's nothing to the left of these charts, that just helps. You know, you're in uncharted territory. You don't know what kind of move you could get, really. So.
Yeah, we've obviously seen the well-publicized big moves from a stock like LinkedIn. I remember on its IPO day, it traded up to 120 a share. It was sort of a thin float. People were saying there's no chance that it even touches that $120 area ever again. You go ahead back and take a look at LinkedIn. Right? Yeah. And like you said, when there's nothing in the left and to the left of the stock in the way, it can lead to a huge move. Another concept that we talked about, Rich talked about in a blog post this week, was Goldman Sachs and the banks and a trade setup he was looking for in Goldman Sachs that actually didn't work out. And I think, like he talked about in the opening describing the active trader course, is that not every idea you have is going to pan out perfectly. And a lot of times people say that the good traders are the ones that know how to find winners. The best traders are the ones that know how to cut losers short and know how to manage losing trades. And so Goldman Sachs is a good example, I think, if you could talk everyone through that trade setup that you had.
Yeah, I mean, like the reason why I liked it was you could see like 168 to 168.20. It was a pretty good looking cup and handle pattern forming. So right up in that area, that should have been the breakout. And on that day, it was okay. It was performing well, but you could see we closed with that topping tail. And that day should have been the breakout day. So once that low was undercut, I don't know what that date was.
I'll tell you. Hold on a second here. That date was 8/6.
So once that low was taken out, I think it was around 166 and change. I'm done with the trade because that low should have held. That should have been a breakout day. That should have been a day to take note. And immediately we came right back into the range. And I look at the moving averages now. Doesn't really have too much slope now. The 8 now is curling down. The 21 is curling down. This means that this stock is going to need some more time or some more performance to get back in motion.
You got rejected at its 8 EMA again. You talked about EMAs curling down.
That's not the easier money. That's going to be a tough trade. That's going to be like pulling teeth. Versus something that's in motion, it will be easier. Nothing's ever easy, trust me. But easier is the proper term, I would say.
Yep. No such thing as a free lunch in the stock market.
No, definitely not.
And just a couple other things to point out today. You have a lot of strength in commodity stocks, stocks like Cliff Natural Resources, CLF, U.S. Steel X, Freeport-McMoRan, FCX, stocks that we highlighted last night off the charts. In terms of those laggard type plays, is that something that you stay away from and you just follow the active trading course methodology that prefers to, find winners that are trending on multiple time frames, or are there setups that you look for in laggard stocks?
Normally what I like to look for is that it's called a catch play, and we talk about it in the room a lot. And basically it's a play that can get you ahead of a move that something changed. So for example, something like a Cleveland Cliffs has been running below the 8 and 21 for quite a while. When it starts to come back above the 8 and 21, that's what's known as a catch play.
So you go back and look at the monthly chart of CLF. Obviously, it was a $120 stock early 2008. Even back in mid-2011, it was a $100 stock. Come all the way back down into this support level. We go back to the daily chart. What's an area that...
That's probably, see that probably mid-July, July 15th, after the double bottom in the beginning of the month. Then once we saw the moving average come underneath and start to support the name, that's where, if you want to use that play, that's where your pivot goes, that's where your at would be, and that's where you can try to catch a bottom, but not catch a falling knife. Actually do it in a logical way, have an out in mind, and not get hurt on a position. It's just like with a stock that's just trying to bottom out, you don't know if that's the bottom. So if you really can't have a nice pivot or a moving average to trade against, you really don't know what you're doing. You really don't know what your risk truly is.
Yeah, and that's the big thing we always talk about, whether you're chasing a leader to new highs or trying to catch a bottom, you never do anything blindly. Everything, you have levels, you have plans for every trade, you have plans for your entire career. Everything in the active trader course we teach is about, and Rich could speak to this more directly, but it's about having a plan on every trade, every day, every week, every year, your entire career.
And also, it's just not fighting trends either. And like I said, like with Facebook, I wouldn't have touched Facebook before the earnings announcement with the 10-foot pole. Now it's been a focus for the last couple of weeks. Another group is the cloud names. We just punch up the cloud names
Yeah.
really quick. Not that bottom plays are my bread and butter, but once something changes, I think it pays to be flexible. You can be objective and still make money off of it. I did not become interested in it until it had the big earnings number, and then it based for about 10 days. It actually printed an inside week. And now to the upside, I'm currently in this trade. I did take some off in front of 86, but above 86, we have a nice gap that some of it could get filled. Also, F5 in the same group has a very similar pattern. So it's nice when the group is going in the same direction. It's just one tailwind in the back. So this is an example of a lagged group that I probably didn't touch VMware once before this week, just because it wasn't on my radar. It just wasn't worth my time. Now the slope is there, the setup is there, something changed.
Yep. Well, I think a lot of great points. Hopefully you guys got a little bit more introduction to Rich's style and the active trading course style in this daily recap. I want to remind you, next Thursday after the close, Rich and Evan are having a free webinar, a part of this webinar series that's been really popular among the community. The name of the webinar is From Student to Teacher, the Active Trader Blueprint. So it's going to be some of Rich going over his evolution as a trader and how the active trader course helped him evolve to where he is today. So I think it's going to be a really great webinar. Any last words about that webinar that you want to tell the community?
I think it's going to be classic. I think it's
going to be a classic.
Webinar.
There you go.
I think you're selling it short. No, I just think just come by. If you liked what you heard today, I think we're going to go into some more detail on the setups and just what a normal day is like. We do game planning every morning. We do Q&A. We have a topic every week that we just discuss, just so that the ongoing room has that vibe of always learning, always trying to get better, always trying to help each other out in the room too. So come by, the webinar. You'll talk to me, talk to Laz, get a little more color on the group, on the room, and see if it's right for you, which I think from a day to a swing trader, I think it is. So please come by. I'm excited to have you.
All right. Well, that does it for today's daily recap. Thank you, Rich, for joining me. Hopefully you'll see him on some more videos here in the near future, because I think he's a really great resource and a great mind. Thanks again for joining us. We'll see you out here on Monday.